Mr. A.K. Prabhakar now joining in on the show. Mr. Prabhakar, good to have you on board. Just wanted to understand at the current juncture what exactly your outlook is on the markets. Do you believe that, the fact that we are constantly debating whether or not we have finally found a bottom, that continues to remain on top of mind of investors? What's your assessment given that we're at 8,900 and still a lot of uncertainty with respect to the virus?
Yeah, good morning, everyone. It is very difficult to judge. This kind of event has happened about 102 years before, and the lockdown of almost 40 days is not something we have faced it in our lifetime. So, what would be the impact? It is very difficult to say, and whether we have made a bottom, I doubt it. I feel after few months, once the reality check happens, market would correct again, so I would wait. But there are few sectors and few stocks which will benefit. Now, pharma is one such sector where this COVID-19 impact has been minimal and it has benefited mostly. And even exchanges are running normally. So, any business which is running normally, I think investors should focus on it. There are sectors which will have an impact, and what is the extent of impact, we will know it only after 3-4 months.
Yes, of course, it is a time of uncertainty, but what's the sense that you're getting when it comes to TCS, Mr. Prabhakar? You've got the numbers expected today, and we will see this time around the outlook on their clients' IT budgets. That's going to be closely monitored. The dollar revenue, well, that's seen a little bit tempered off by about 0.7%. Profits are seen higher at 8,216 crores. This is, of course, as per the ET Now estimates. What's your outlook on TCS?
See, TCS is a company which manages crisis very well. So even the new recruitment, they have not they are taking the people inside, whereas other companies have said no, at this point of time they cannot. So they are a company where they know how to manage the crisis. So I think their impact on revenue or margins will be least compared to even Wipro, which announced the result yesterday. I think the margin impact is not going to be big, and they will be saving on travel to an extent. Even if there is a revenue loss, the traveling cost will come down, so that will maintain their margin, is my view.
Okay, yes, indeed. We'll be closely eyeing out what TCS does. And the stock as we speak, well, currently quoting at about 17.15 in today's trading session. Mr. Prabhakar, wanted to also get in your views then on some of the other sectors that are in focus. The cement sector, for instance, you've got brokerages that are fairly bullish, talking about how the demand could see only a mild decline, and the downside to the valuations of some of the large cap names like ACC and Ambuja could potentially be limited. Where do you stand when it comes to the cement space, especially because we are even now hearing reports of things resuming very slightly, a partial opening as well? What's your sense on the cement counters?
See, if government has to kickstart the economy, construction or road is a sector where you can generate huge employment. So I think that sector will be in focus. That is why cement stocks have started to rally. We like ACC, Ambuja, Ultratech and Shree Cement. I think that space is looking attractive after the correction. Even Ramco Cement can be looked at.
D-Mike? All right, Mr. Prabhakar. Also, just wanted to get your sense on what's happening with three specific domestic companies, IPCA, Torrent, and Cadila. They all manufacture hydroxychloroquine. So given that it will be part of any treatment plan that goes ahead, what's your view on these three stocks? I know you also spoke about IPCA recently.
Yeah, see, IPCA, it is a unique company. It has a backward integrated API also. So they make the maximum margin in this product. And there is a plant in Aurangabad where I think it will start in next 6 months. It is almost 1,000 acres, and it is a very old company which they have to restart it. So one part of the plant, I think no, they can restart it faster. Other part of the plant, no, they need to rework it, so it will take 1 year. So that will increase their API facility, and most of the companies are looking to have a API unit in India so that they don't need to depend on China. So in that, even Dr. Reddy is a beneficiary. Now even Cadila, Cipla will find their way out. Now I like even Divi's lab at the current levels also.
All right, just taking a look at the list of losers this afternoon, you've got Tech Mahindra, which is on top of the pile. Kotak Mahindra Bank as well continues to see a bit of pressure right now, 2.5% off. There's Infy that's in the red, as well as HCL Technologies and TCS. So primarily your trouble pocket is the IT basket. On the flip side though, you've got Vedanta, which is shining in trade, and Darko as well flexing its muscles. Take a look at names like Grasim, Bajaj Finserv, and even L&T isn't holding out too badly. In fact, just this morning we had a report from Credit Suisse on L&T where they've got a buy rating and an 1,100 rupee target price, saying that the Q4 inflows already have exceeded the worst case estimates, and the company has built in an adequate buffer for a tough FY21. Mr. Prabhakar, where is it that you stand when it comes to the capital goods stroke infrastructure pocket? Do you think that it's a very clear demarcation of the boys versus the men, and that you will be sticking with marquee names within this space?
No, infra, I would wait, because how much the government is going to spend, I need to see. Now, cement will be faster to pick up, but infra companies, for them, it is going to be very difficult because they have huge debt in their balance sheet. So, we need to understand what is that government is planning. So, infra and capital goods, I would wait. Now, in capital goods, there are few companies, which can do very good. DEL came with the statement on 1st of April, which said that, their top line was 12,500 and their order book is 51,500 crores. That means almost there is a visibility for next 4 years. So I think BEL at current level looks very attractive for a long-term investor. L&T is one company, a mega company where even infra and capital goods space, I think they will get the maximum order. The leader takes it all. So I think L&T we can look at it. But other companies, I would wait patiently.
All right. Thank you so much, Mr. Prabhakar, for joining in and sharing with us your outlook on the markets as well as various sectors.